All right, let's get this going. So, hey, good day, traders. Today I'm going to go through my trading recap for December 4th, 2024. Uh, let's go through what the market did for that day, first of all. So, on that day, the SPY gapped up about 0.32%. The Qs gapped up about what 0.62%. So the Qs were a little bit stronger than the SPY, and that's what the day was. So for this day, anything that gapped up but had a relative strength than the SPY or the Qs would be tradable. For the gap and go strategy, also, I'm going to show you what I look for before I actually get into a trade. All right, let's go ahead and review what the gap and go strategy actually requires us to have before we get into a trade. Obviously, this is not my trading strategy. This is a strategy that I'm trying to learn and basically perfect, or I'm trying to be an expert on this trade. So what do we look for? What are the criteria that a stock must meet before we actually get interested into in trading the stock? So first of all, we want to look for a gap up or gap down. What does the first criteria say? Stock must gap up or gap down more than 3% at the opening of the trading day. So, yep, we're gonna need to see a stock gapping up or gapping down more than 3%, preferably because of earnings or some significant news for that day for that stock, in that day for that specific stock. And acquisitions, gaps that are created because of acquisitions, mergers, or dividend news usually do not trade the stock, because the reason why there won't be that much volatility for the day. Upgrades and downgrade news sometimes is tradable. And the daily ATR or ATV, actually, average traded volume for the stock, should be more than 2 million shares traded per day. And then pre-market volume and or volume traded in the first 5 minutes should be more than 300K. Otherwise, we're not going to be able to find enough liquidity on the stock for us to get in and get out of the trade. So we want to see high volume, which means more volatility, which gives us more opportunity to get into the trade and get out of the trade, which also narrows down the spread between the buyers and sellers, which is pretty good for us. So what do we look for? If it's a gap up, wait for a move down or in the direction of closing the gap in the first couple of minutes. This means the sellers are in. Once the sellers get exhausted, on a reversal, we take the stock on a reversal towards the long direction, or we long the stock. We buy the stock and expect it to go higher so we can take profit. On the reverse side, if it's a gap down, we wait for it to move in the direction of closing the gap. So if it's a gap down, we want to see it in the first couple of minutes going higher to close the gap. And then we take the first reversal. Another thing to keep an eye is do not short stocks of well-known companies on a gap down or gap up on a gap down. People love buying them for the long term. Apple, IBM. This is also obviously something we need to look for. Be careful of spreads. Spreads are not good. The higher the spread, the more riskier the trade is going to be because you don't have liquidity, and it's going to be very hard to get into and out of the trade with a profit. Because if there is a 50-cent spread on a stock and you take 500 shares, you're going to start down $250. Then you have to account for that spread when you take profit. So if your target is about $1, you actually have to wait for a move of $1.50 for you to actually meet your risk to reward requirements. So what's my risk unit? My risk unit is about $400 in these kinds of trades. If I find a stock that meets all these criteria, I take one risk unit about $400. Sometimes I get into a trade a little bit quicker like on the first reversal, and I take only half my risk unit, and then I add once I find a confirmation that the stock actually wants to continue in the direction that I want it to go. Alright, we're gonna go through the trades that I took on December 4th. So these are the trades: Roku, LUNR, CRM. 2 winning, 1 losing trade. Alright, let's start with Roku. I'm gonna maximize the chart right here. Okay, so first of all, let's see if Roku actually meets the requirements. So what did we say in the first thing? We look for what? A stock gapping up or down more than 3% at the opening of the trading day. How about Roku? Did it gap up or gap down? So the closing price on the previous day, which is December 3rd, was what? $75.18, somewhere around that area. The first candle or the opening price of Roku on the 4th was what? $80.17, which is about 5.31% gap up. So what do we need to see? Hmm. Daily average traded volume should be more than 2 million. I'm going to show you on Roku, but I know for sure that the daily ATR, average daily volume, ADV, is actually over 1 million. So this is the daily chart of Roku, and look at the volume here. Look at the volume bars. Volume is going to show up here. So volume 6.1, 13.24, 5.3, 3.98, 5.96. Like you can land anywhere, it's going to have more than 2 million shares traded per day. All right, now let's go back to 1 minute candle charts on the forward 9:30 a.m. So it gapped up. The first move that we want to see is move towards closing the gap, which was this first 1 minute candle. It opened right here. It got as high as $80.50 and as low as what, $79.13, a little bit over a dollar move. So it went down. My trigger was $80.40. My stop loss was about a dollar. Risk on the trade. So $1 risk unit. One risk unit for me is $400. I should take 400 shares. So on the reversal, this is a little bit of a quicker trade. I took it at $80.73. Even though my trigger was at $80.40, I kind of chased it a little bit, about 30 cents. So I got filled in about 33 cents above my entry price. But when I take a partial, it's not about when I got filled. It's about where the trigger price for the stock is. So I should take my partial when it gets around $81.40. Even though I got filled in at 81.73, $80.73, sorry. What did I do? I took my partial, 3/4 of the share. What did it say here? Risk unit. One risk unit with 3/4, risk to reward. 3/4 of the trade, I should take my partial. Or if it doesn't work, I should get out of it. Okay, so Roku went up 3/4 out at $81.42. And then I reduced half of the quarter shares left, 50 shares at $81.90. And I got out of the trade a little too quick, actually, now that I see it. But this is something that I've been struggling to let the winners go, or like letting the runners work for the day. So $82.20 last quarter of the share. So Roku, all in all, a winning trade. Okay. Gap and go trades work in the first 1 hour. After that, it doesn't matter what it did. But look at it. Took our partial. We were out in the first what? 4 minutes in the day. 1, 2, 3, 4, 5. Basically, within 5 minutes, in and out. That's it. Second trade, a losing trade. LUNR. Let's see what happened here. Did it meet our criteria? Let's see. Gap up or gap down of at least 3% or more. Okay, what did LUNR did? LUNR gap down. Closing price the previous day, December 3rd, was $14.17. Opening price on December 4th was what? $11.52. So we've got a gap down of about 18% on the open. What was the volume at the opening? 1.16 million shares traded in the first 1 minute of the trading session. So pretty good volume. So what do we need? What do we need to see? Daily average traded volume more than 2 million. Trust me on that. If not, go ahead and check it out. Pre-market volume more than 300k, 1.16 million on LUNR, or around that. If I'm probably not exactly the same. If it's a gap up, wait for it to move down in the direction of closing the gap. in the first couple of minutes. If it's a gap down, wait for it to move up in the direction of closing the gap. Okay, did it move towards the direction of closing the gap? Absolutely. It opened right here and it went towards the direction of closing the gap. Let's see. No. I should have an arrow somewhere here that I can actually use. Horizontal trend extend ray trend line. Yeah. No, it doesn't matter. But it went into the direction of closing the gap right here. So we take it short on the first reversal. What's our risk unit? One risk unit is what? $400, right? So one risk unit, $400. Let's see. Entry price under $11.70 short. So how many shares did I take? About 60 cents. My stop loss, not above the highs, but like a little bit lower than the highs. In this case, it can be about the highs because it's about 20 cents. So 11.99, 12 cents, 30 cents actually stop loss. 30 cents by 600 is what? 30 multiplied by 600 is $180. So half my risk unit. Why did I take half of my risk unit? Because I wasn't sure. Like I should have seen it somewhere around here for me to actually be a little bit sure that he wants to go lower. So if it came down here and then he decided, so it came down here, found support at the VWAP, reversed, and then if it starts coming down towards breaking the lows, towards the low of the day, then I would have added another 600 shares right here, and then I would have had a full risk unit on the trade. But now I only took half size because this could be just like a retracement to a little bit lower so it can go higher, which is exactly what happened. But like I couldn't know at that point because now we see the chart, but then like this, all these candles were forming at the time that I took the trade. So basically, if it had went down, I would have taken about 30 cents partial on it, 3/4 of the share, the trade or my size. But it didn't go my way, so I have to close the trade. I have to get out of it. Get out of the way. Get out of the way, man. Get out of the way. So I stopped my trade. I actually got out of it at $12 exactly on the spot. So this was a losing trade for me. Third trade, CRM, Salesforce. Let's see what happened. CRM. CRM, did we have a gap up or gap down? Gap up, because the closing price the previous day on December 3rd was what? $331.76. It opened the next day. What price? At 366.81. Why did it do that? Earnings. CRM reported its earnings December 3rd, the day before I traded it, like after market close. So once it reported its earnings, it gapped up for the day. It gapped up. What do we look for it? Volume. First 1 minute, 872. Pretty good. Average daily traded volume on CRM, more than $2 million. Trust me on that. Uh, Daily average traded volume more than 2 million. Check. Gap up over 3%. Check. Pre-market volume more than 300K. Check. If it's a gap up, wait for it to move down in the direction of closing the gap in the first couple of minutes, which is seller's exhaustion, and then on a reversal, take it to the long side. All right. CRM came down. Reversal candle right here. If it had a longer tail, it would have been awesome, but it started reversing here. So what did I do? First entry, long. How many shares? 100 shares. 360, 361. My stop loss was at around $360, $360, which is about 3 points below my entry. 100 shares, $300 risk, but it's not one risk unit, so very close enough. The reason I took 300 shares is I don't want to take 120, like 130 shares, because then I have to think about how much it has to move for me to actually take my partial. And I like round numbers. It's easier to make the calculations in your head before you trade. And this thing is happening like real quick. I'm also monitoring multiple stocks, so you have to think fast. You have to be thinking real fast. So that's why I only take whole numbers or like round numbers. The idea was to take CRM on the first reversal with a half risk unit or half share size, and then add to it once I see a confirmation that he wants to go in the direction of in my direction. So I added once I saw CRM come here, I added like I got into the trade about 100 shares. Then I saw it get some kind of resistance here, find support, higher low. It made a higher low, and then it was trying to make a higher high. So I added another 100 shares right here at 366.50. I was hoping to get at around 365.50, but I got filled $1 above it. What happens then? You take your partial when it gets to 1-to-1 risk reward ratio. So on my second ad, it did not get to my 1-to-1 risk to reward ratio, because this should have been my stop. If this was like the first time I was getting into the trade, this area right here, 362 should have been my stop. I got in at 366.50, so almost 4 points lower. So I should have waited until 370, but it never got there. But on my first risk to reward ratio, I got out at 368. So I got almost 2 risk units per risk. So basically, now we have 200 shares. Take a partial 3/4, sell 150 shares at 368.22, and then let the rest run or get out at break even. What happened? The rest CRM came down pretty quick, and then I got out of my last quarter at $362.52 with a small loss. I should not have let it happen like that, but hey, sometimes it happens. I was hoping for CRM to come down here and then reverse and then go higher. He did the other way around. It almost got to the lows. It actually didn't make a new low for that day. Low right here is 357.59, 357.60. Oh my god, by a cent. Saved by a cent. Crazy. Crazy how technicals work. But yeah, so took a partial, 3/4, winning trade out of the last quarter with a loss, which is fine because we've already locked our profit for that day. This was the recap for December 4th. Thank you for watching. Please like and subscribe to the channel if you like what you saw here. I'm going to try to put up videos, recaps or direct recordings of my trades for the day. Please share and subscribe on my channel. It helps other people get more education, or like you can learn about trading from what I do, my mistakes, the whole thing, and it helps my channel too. I'd appreciate it. Thank you guys. See you on the next video. You all have a blessed day. Bye.